Silver's super cycle, to trade or invest. So before we get to silver's super cycle, let's just cut to a short clip with commodity trader Todd Bubba Horwitz.
But your perspective then on silver as well, because we covered gold. You're saying at the moment you're short paper gold. What about for silver?
I'm also short paper silver at the moment, but that is, again, those are both right on the cusp of being reversing out. You know, we trade, not actively, but we swing trade them, and we're either long. I'm either long or short on paper every single day of the year, and we're very close. I think over 26 would be a reversal, anyways. And of course, but overall, again, in all the metals, I'm very bullish long term. But again, I'm willing to hold them, as a physical tool. Okay. I do love, if you're looking just to play it for a trade, I love AG. It's a silver miner for $13. I think that's a great little play if you're looking for something. But I mean, I think that the most important thing people can do is own physical metals, because I think I don't think there's enough physical to cover the amount of paper that's been put out there. Okay. And I think that could be a problem at some point as well.
Now, as a lifelong trader, what does that actually mean? How do you interpret that? Because so many people have said that there's more paper, precious metals out there than the physical metal. What does that actually mean for the average person, if you could kind of put that in layman's terms?
What that means is that if everybody's holding an ETF or a company or whatever, that there's more paper sold that represents. So I got a better way to explain it. Okay, if you go back in history, they used to make silver certificates. Before they said Federal Reserve notes on $1, they said silver certificates, and you could take that $1 into the bank and get a Morgan silver dollar. Okay. Well, obviously that's changed. We can't do that anymore because now they go from silver certificates to notes. Okay. I think there's been more notes put out there than there's actually physical supply of the metal. So if everybody wanted to cash in and get physical all at one time, there isn't enough. So you'd have a lot of worthless paper that would not help you if you really needed it.
And that's the reason then to hold the physical metal is who knows if you're actually going to be able to get the physical metal if you're just holding the paper.
Exactly. And the other thing about physical is, again, there's no company behind it. There's nobody behind it. It is simply a piece of it's a hard asset, like your home, like your car, that you put in your safe and you have it. So if you do need it, you've got a place to get it. If not, it'll appreciate in value over time anyways.
So this is a pretty big tweet from Frank Justra, who said, "I have never been a fan of conspiracies, but my 45 years experience in trading markets tells me that someone is deliberately suppressing the gold price, especially in the past 2 years. I suspect we will see a reset in the global monetary system sometime soon." That's pretty big, coming from Frank. So from Visual Capitalists, there's this piece, The Evolution of Silver's Uses, Silver Through the Ages, and it's a pretty cool little piece, and it just talks about the uses of silver, both in the past, present, and also through the future, and the demand for silver, how it's been used and how it's going to be used in the future from an industrial point of view. And you can see, technology and defense, and now this whole EV green technology, which you and I both know it's not green at all. So as the world pushes towards decarbonisation, silver demand will always persist. Now, it's got a bit more information below, but I'll let you guys check this out in your own time. But we are going to discuss where silver is going moving forward from a industrial demand point of view. So in the silver series, also on Visual Capitalist, I found this really fascinating. It's a 3-part piece, and it was spread over a period of 18 months that Nicholas did this. So the first one was September 11, 2019. Interesting date. And then it was February 2020, and then January 2021. So we're just going to have a look at this. So part one, the start of a new cycle, a new gold-silver cycle. And bankers blowing bubbles with cheap QE and abundant currency. QE worked as in pushing financial markets up, creating a bull market and everything. So yeah, housing, stocks, bonds, everything except precious metals. And goes on to talk about, you know, the debt bubble. And remember, this was written in September 11, 2019. We know what's happened to the debt bubble, both from a household, corporate, and sovereign debt bubble. And Luke Gromen thinks that the sovereign debt bubble is going to burst very soon. Yeah, so, you know, when this was written, things have become a lot worse. And currency versus precious metals, as more and more dollars chase a limited supply of goods, it's only a matter of time before the price of goods go up or inflate. This inflation erodes the purchasing power of every dollar, essentially devaluing currencies. Well, we've been seeing that over the last couple of years, haven't we? So here we've got a chart showing all the major currencies depreciating relative to gold. Gold and silver preserve their values over time relative to currencies, yet the current price, gold and silver, do not reflect the reality of cheap and abundant currency. It's only a matter of time for gold and silver to shine, but when? The perfect storm for a gold-silver cycle. Gold and silver futures contracts. Now, as you guys all know, most traders do not trade physical gold and silver, but paper contracts written with the promise to buy at a future price. Every week, US commodity exchanges such as COMEX and NYMEX publish the COT report, the Commitment of Traders report. This report summarizes the positions, both long and short, of traders for a particular commodity, such as gold and silver. And in that report, there's three basic groups that they cover. That's commercial traders, non-commercial traders, and retail traders. So typically you have non-commercial traders which are long and commercial traders which are short. But that changed in 2016, which led to a huge gold price rally into 2017. And then the same pattern occurred in September 2018. And here's a chart from Incrementum. They're the guys from In Gold We Trust. And so I find this interesting, the gold-silver ratio compression. Now, you guys know the gold-silver ratio just means, you know, if it's 80 is 80 ounces of silver to buy 1 ounce of gold. You don't need me to tell you guys that. But if you have a look at this chart, every time the gold-to-silver ratio compressed, we had dramatic moves in both the price of gold and silver, but in particular silver, if you have a look here. So there's an example here. Silver went from $1.89 on November 72 to $36 on Feb 1980, which is an increase of 1,800%, while the gold to silver ratio was in a downtrend. And you can see, further downtrends in the gold silver ratio, where silver moved up 159% and 60%, another 60%, 64%, 203%. 371%, and now where? Now, remember, this was written in 2019. So the third one is scarcity, declining silver production. Here they say that total global silver supply decreased from 1,050 million ounces in 2014 to approximately 950 million ounces in 2019. And now we're hearing that it's about 800 million ounces a year. So from what I've seen is that silver supply, mining supply, that is, actually peaked in 2016, but 2014, 2016, whatever, we have had declining silver production since then. And also remember that most of the top 10 mining producers, the silver mines in the world, are like 29 years old. They're depleting, depleted mines. 4 is the silver exception. It's not just a precious metal, but it's also useful. It's used in industrial sense. You guys know all about that. About 56% of its annual consumption is used in industrial purposes. And this was the 2018 numbers. You can see the industrial uses there. So numbers are a little bit old now. Okay, so looking at part 2 of the new gold silver cycle. So looking at the supply and demand of silver, in addition to the investment thesis for silver as a monetary metal, silver is also special for its industrial uses. Silver is produced primarily as a byproduct of non-precious metals mining, which we'll come to. With base metals currently in a bear market, there is dwindling supply of silver. Well, that's now changed. Base metals have been in a bull market. But silver is a green metal which supports rising industrial demand. And this is placing upward pressure on the price of silver, potentially indicating start of a new gold silver cycle. And remember, part 2 was written in February 2020. So investment demand. Silver is a precious metal. Yes, we all know that. Just like gold, silver has functioned as money for centuries. Actually, I've done a video on this where we looked at silver as money, and we went all the way back to the Old Testament in the book of Genesis and looked at money throughout history, and silver has actually been money more times than gold, more often than gold. And in fact, the word money is actually silver in many languages, I think Spanish and French and some others. Yeah, and its role of a store of value as a hedge against monetary inflation is growing. Currency debasement is not new. Governments throughout history have printed money, while silver retains its value relative to these paper assets. However, the average investor today does not own physical silver. Rather, they invest in physical or financial instruments that track the performance of the physical commodity itself, such as ETFs. And there's 2 types. A direct silver ETF owns the silver bullion and acts as a custodian on behalf of the buyer, if you believe the ETF actually holds it. Yeah. An equity silver ETF buys stocks of silver mining companies and tracks an equity index. Once again, I can't remember if I did a video on ETFs or not. If I did, it would have been a while ago, or I was meaning to do one. And actually, if you have a look at the agreements, the fine print, when you buy an ETF, you don't own anything. So silver ounces in ETFs by country. So you can see that there was a lot of demand flowing into ETFs in 2006 all the way up to 2011, where the silver price got up to pushing that $50 mark before coming all the way back down, hitting a low of just under $12 in March 2020. But you can see that the actual amount flatlined. It didn't crash in terms of investment into ETFs, but yeah. So it's also got a lot of industrial demand. As we know, silver is not just an investment, but also a green metal with many industrial applications. In fact, silver is powering the green revolution. Silver is the best natural conductor of electricity and heat. It's used in electronics, batteries, solar panels, alloys, coatings, LEDs and chips and semiconductors, and obviously electric vehicles. So as investments in the green revolution are demanding more and more silver, where is the precious metal coming from? So silver mine supply, silver production is highly concentrated in several countries. Now, this is a little bit old, so we will look at a more updated one of this, and actually I'll elaborate on that as to why I think we could have some silver supply issues moving forward, creating a real genuine squeeze. And the bulk of silver production comes as a byproduct of other metals mines, which I'll touch on in a second about that. As silver is not the primary metal emerging from some of these mines, it faces a supply crunch now. Well, yeah, I'll touch on it in a sec. So the silver supply crunch. Silver supply is falling for 3 reasons: declining production, declining silver mine capacity, and declining reserves of silver. So number 1, the silver supply by source. So you can see mine production and secondary or recycling and government disposals. And supply has decreased for the last 3 years, or since 2016. There you go. So some argue 2014, others say 2016. But prolonged weakness in price provides little incentive for primary silver producers to increase output through expansions or build new mines. Now, yes, if the price does run up, then that will attract more investment into silver mines. It makes silver, some of these smaller mines, actually profitable, and you'll probably see a lot more recycled silver come onto the market as well. But will that be enough? I don't know. We'll wait and see. So you can see here that new silver mine capacity increased due to the run-up in prices between 2010-11, followed by a sharp decline from 2013 onwards. And while above ground supply is dwindling, so is silver in the ground. Nearly all reserves at the largest silver mines have been in decline. As I said, I think they average about 29 years old, the top 10 silver mines in the world. And there are fewer high-grade world-scale deposits. Silver miners who make new discoveries could prove to be the next great opportunity. Declining supply and rising silver demand is setting silver up for the perfect storm. All right, and part 3, silver's role in the new energy era. And this was published just over a year ago. A silver-intensive future. A green future will be mineral-intensive, and metals will find new uses in green technologies, and silver is no exception. Long known as a precious metal, silver is also an industrial metal needed to create an eco-friendly future. Yeah, okay. Forecast demand for silver in green technologies. As the adoption of green technologies like solar panel and EVs increases, so will the demand for silver. A green future depends on silver. And here's a chart just showing the increase in demand for silver in solar, EVs, and also nuclear, which, funny enough, I actually suspect might actually increase. And a lot of people aren't thinking about that when they focus on nuclear. They're just looking at uranium, but silver is also important in that as well. Now, silver's importance in technologies was established long before the era of green technology. I'm not going to use that word. I call it rebuildables. Silver is a critical metal for technology. It acts as an antibacterial metal with the highest thermal and electrical conductivity. Silver has found uses in various technologies over time. So it was used in technology through the Middle Ages and also the 1900s. And then you guys know the uses that silver has been used since the 2000s. So how does silver get used in solar energy? Well, it is the highest electrical conductivity metal, making it an excellent choice for solar power generation. And according to Science Daily, a typical solar panel can contain as much as 20 grams of silver. As global solar capacity grows, so will the demand for silver. So inside a PV cell, there's a little bit of silver being used in there. Silver pastes are used to create conductive layers within the cell on the top and the bottom of the silicon semiconductor. And as we said already, as the best conductor of electricity, silver carries and stores electricity efficiently, maximizing the energy output of the solar cell. And here you can see a chart of the historical and forecasted solar capacity by region out to 2030. And, well, apparently there's a lot more growth in this sector. So silver and EVs, just like other electronic appliances, EVs make use of silver for its conductivity and corrosion resistance. Virtually every electrical connection in a vehicle has silver, and over 55 million ounces of the white metal are used annually by motor vehicles. And here's a chart of projected global EV sales out to 2040. So, yeah, if that's the case, and it may well be, although I think hydrogen technology has the potential, if we can make it work, I think is a better option than EVs. However, this is the projected EV sales moving forward, so that's a heck of a lot of demand. So there's a number of uses for silver with electrical contacts coated with silver across the car. Doesn't matter whether it's an EV or not. And as more consumers go electric, EVs are expected to account for 49% of silver use in automobiles by 2040. Well, that's huge. If that's true and that's accurate, that's huge. So this piece on Visual Capitalists was published in October of last year, so not very long ago, and it talks about the global supply chain of silver. So we've just gone through silver's use in the industrial sense, but let's have a look at the supply chain of silver. So here's a cool chart of the top 20 producers of silver in the world. We'll have a look at it actually broken down so we can read it properly, but I think this is pretty cool just to look at. 50% of global silver production comes from South and Central America. So volatile links, the sustainability of silver's supply, the concentration of silver production in South and Central America puts it at risk of disruptions that can rattle entire industries. Mexico, Chile, and Peru, 3 of the top 5 silver-producing countries, have the highest number of mining conflicts in Latin America. And when the COF forced mine closures in Peru, Argentina, and Mexico, it led to 46 million ounces decline in 2020 in production relative to 2019. And with new governments, especially in Chile, probably didn't even pronounce that properly. By the way, I got a lot of Chilean friends here in Australia, and if they're watching this, they're going to give it to me when I see them next. We've got a left-wing socialist government down there, and they want more, especially copper, but also silver. They want more taxes, more a slice of the pie, and don't be surprised if we see some of these countries nationalize these mines. So this is a fantastic visualization of silver production in terms of being a primary. How much is from primary production mines and as a byproduct. So in 2020, only 27% of silver production came from primary silver mines. The rest was a byproduct of other minerals of lead and zinc, copper, gold, and obviously some others. And as I mentioned earlier, in addition, the world's biggest silver mines are aging, 29.5 years. So actually, because this was done in October last year, now 30 years. So the average age of the top 10 silver mines in the world are now 30 years old. So if you guys haven't yet seen my video, Commodity Super Cycle, I'll put a link in the description below. I highly recommend you guys watch it. If you're interested in commodities and silver and gold, then you'll want to watch this one. And in it, I shared this chart also from Visual Capitalists. I love Visual Capitalists, guys. If you don't have that website saved, I recommend you do. There's just so many wonderful articles on there which really visualize different sectors and the size of different markets, etc., etc. It's really great. But I shared this, and this is that, once again, that out to 2030 demand coming from, and this is just EVs. And we discussed how nickel, in particular aluminium, 14 times demand needed over the coming 8 years ahead. And I'm very much bullish all these base metals. highly bullish. I love commodities. I think it's fantastic to get into commodities right now. And I just want to share a couple of charts or visuals from, once again, Visual Capitalists. And if you guys want to check this out, just go Google all the metals we mined in one chart, Visual Capitalists, and just have a look at the size of this. So you see the size of iron ore, but have a look at the size of copper, aluminium, lead, nickel. These are zinc. These are base metals that I'm really, really bullish on. Indium is another one very bullish on. Obviously silver, you can have a look at the size of silver market there. Cobalt, I'm probably missing one there, but that I'm bullish on. But just have a look at that and then measure it up against this one, also from Visual Capitalists, all the metals for renewable tech. And aluminium's a big one. Cobalt, copper, Dr. Copper. I think we're going to see all-time highs in copper very soon. And when I say very soon, it might be a year, it might be 2 years. But I definitely think within the next few years, we're going to see all-time highs for copper. Indium, I mentioned, I'm bullish on. Lead, lithium for other reasons, but actually uranium I'm probably more bullish on. Lithium's had a big run up. Nickel, super bullish on. Just waiting to get back in. I sold my nickel positions, just waiting to get back in, and obviously silver and zinc as well. So anyway, guys, what do you guys think? Do you think we're about to see, we talk about commodity super cycle, but could we see a silver super cycle with the fundamentals making sense that there's going to be more demand needed for silver, and the price of silver is going to have to rise if we're going to attract investment to create more supply, to make it even viable to provide more supply. And ultimately, when the paper market breaks, and I do believe at some point it is going to break, we're seeing a monetary regime shift with sovereigns now looking at their foreign reserve holdings and going, you know what, we don't want counterparty risk anymore. We want the real thing. And for them, it's gold. But we're seeing this shift, and I think we're going to see a lot of these exchanges that use paper come under extreme pressure in the near future. And when that breaks, I think we're going to see a move in particular silver like we've never seen before. And I want to be around and participate in that. Now, I don't know when that's going to happen, but we are in markets that are breaking. We are seeing huge geopolitical changes happening. And so who knows? This thing could be a lot sooner, or it could be a lot further away than any of us think. But the fundamentals make sense for silver, in my opinion, both on an investment demand because of the way the debt markets are, what's happening with inflation, what's happening with foreign reserves, sanctions, all of that stuff. So from an investment demand, I see silver increasing, but also in an industrial sense. And as we said in this video, that the mine supply is dwindling, and our major miners, they're 30 years old now. And where is the next big silver mines going to come from? So I think it's all set up for an asymmetric trade, and I did a video on this silver and copper's asymmetric trade, and I'll put a link in the description below to that one if you haven't watched it. Yep, these are the reasons why I'm bullish on the metal. What do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it, guys. If you haven't yet subscribed, do so. Hit that notification bell so you get all my videos. Take care, everyone, and I'll see you all again on another episode of Finance Uncut.